Hey, everybody. Happy Thursday to you. Still coming to you from sunny Orlando, Florida, United States of America, with dreams of returning to England when it's safe to hop onto a plane, which doesn't look like it's going to be anytime soon. But welcome to the live stream. Do every Thursday evening. If you have questions about your investments, peer-to-peer related or general stock market investing, you're worried, concerned, you're excited, put them in the comments. I will go ahead and use this time to sort of address anything and give you any information that I have about peer-to-peer lending. I have a few things to get to. It was a pretty quiet week in peer-to-peer lending in general. Obviously, the stock market has been sort of up and down at the moment, which is going to be expected. But today we're going to be talking about Growth Street a little bit, Rate Setter, Lendy, what's going on with them. Some stuff has been coming out on Lendy, which is frustrating. We're going to be talking about Funding Secure, their administration, the money thing. Not too much information on assets, just some opinions on what I think is going to be some positive things that assets are experiencing. Funding Circle, also some positive things going on in there. May not look like it as a peer-to-peer lending investor, but what the company's being able to achieve by getting into these government-backed loans has been generally a positive thing for keeping the company's revenues high. So we're going to chat about that. As always, let me know where you're watching from this evening. I'm here in Orlando at the moment, my sort of pseudo second home, and it's pretty warm here. We're going to talk about a little bit of Bitcoin tonight, perhaps something that I've really have always thought of as a investment black hole, but I'm starting to look at what's going on globally in the economy. And I tell you, Bitcoin is starting to look very attractive right now. And I'm going to sort of talk about that a little bit. I've been working on an article about my views on Bitcoin and why I think that might be somewhere where you want to stash a little bit of money for the long term. So we'll talk about Growth Street, High Allen in Basingstoke. We will talk about Growth Street, Allen, High Phillip, Milton Keynes. We got Vince, one of the regulars. Peter Vince from Leatherhead. Hillary in Nottingham. Keith in Lincoln, close to my heart, good old Northeast, being a Grimsby boy that I am. And Sue from North Staffordshire. And we got David in sunny Norfolk. David is one of the index fund proponents who likes to post in the Facebook group. By the way, if you haven't joined the Financial Thing Facebook group, it is a private group that I put together where we could just kind of discuss investing and peer-to-peer lending without any evil eyes on it. So I'm going to put that post. If you'd like to join the group, then please send me a request. I'll get you into the group. I do post on there daily, anything interesting that I find about peer-to-peer lending. Some good information in there. And hi, Aki Chap. I got your name right this week, I think. Aki, right? Aki Chap. See, we've got Paul in Kenilworth and Brian from Woburn in our peer-to-peer community. Please go ahead and subscribe to the YouTube channel if you haven't. I'm on this mission. I'm very transparent about me trying to build this business, a Financial Thing. And in order to monetize a YouTube channel, you do have to get to 1,000 subscribers. And it's sort of been a bit of a slow road for me. I haven't been able to crack the YouTube code, but I am trying desperately to get to 1,000 subscribers so I can try to generate some ad revenue just to keep the Financial Thing business moving forward. So if you can go ahead and subscribe, that would be a great help. Your friends and family. I'm not too ashamed to ask for help when it comes to growing this business because all of you have been a part of that. And, I give away all of my information for free and do these streams for free. So if you can subscribe, that would be a great help. Sue, you're very welcome. Welcome to the Facebook group. Absolutely fine. Yes, hi, Aki in Accrington. Tony and Hove. Yes, Paul. Hi, Paul. Hi, Chris. Nice to see everybody. So Paul says premium bonds are the best investment at the moment and probably the safest. Yeah. I feel a little bit on the fence about premium bonds because, if you work out the actual returns on premium bonds, sure, there's a chance you can get lucky with them and score a big win, but most people are not experiencing that due to the odds on premium bonds, and they are obviously tax effective. But over the long run, it's really not a place that I'd ever want to put a lot of money. I actually forced my mother to sell her premium bonds about 3 or 4 years ago to put them into index trackers, which has returned her some really good money, even despite the downturn. So I did let her keep, I think, about £500. She had, I believe, about 20,000 pounds in premium bonds that she'd had forever. And we kind of went through the math and totaled up how much she had won over the years, or probably decades, that she'd owned these things. And we calculated the return had been less than 1%, even with the tax advantages. So I just said, look, it's time to let those things go. But, I can understand why people would want to hold them for safety reasons. But over the long term, you are relying on the odds. And I just don't think premium bonds are really going to get you very far monetarily wise. But if you have had a big premium bond win, put it in the chat. I'd love to know about that. I never have. I think I've won £50. I had a couple of £1,000 worth, and I just got rid of them all. But I've never had a big win. Let's see. Accrington, Lancashire. Yeah, Lancashire. Nice to see you, Aki. Thanks again for joining the stream. If you're new to the stream, please go ahead and comment. I tend to run over information sometimes. If you're new, you might not have heard some of the information before, so hopefully I want to give that to you. Annabelle from Dorset. Yes, she's ditched all of premium bonds for peer-to-peer and index trackers, but you can't persuade your mother to do the same. Yeah, unfortunately, the older generation, and I consider myself actually not too old, but I'm sort of in the older generation as life goes at the moment. And if I'd have gone to my granddad and said, hey, you need to get rid of your premium bonds and your financial advisor, he probably would have looked at me like I was the craziest British person on the planet. But the truth is premium bonds really don't return a lot over the long run. So I'll go ahead and start going through some of the information that I have for you this week. If you're an investor in Funding Circle, and I'm not talking about somebody that owns the shares, and obviously the shares have been a complete disaster, and hopefully nobody on this stream actually owns Funding Circle shares, because my heart would go out to you. But if you're a lender, a peer-to-peer lender, you're kind of worried about the company's financial stability of the long run. I think the news that they're releasing about them being able to offer CBILS government loans, and now the other one is the BB. What is the other one? BBL, which is just another form of government loans that are being offered to businesses. I think that's a really good thing that Funding Circle are able to do that. It's not good in the sense that peer-to-peer lenders will be able to invest in those, because they won't. But what it does is it gives Funding Circle that financial lift that I think they need to be able to keep moving forward and to be able to eventually repay peer-to-peer lenders. Funding Circle is not somewhere that I really was ever over the moon about investing. So this is really a thought for people that have money invested through Funding Circle and maybe worried about getting their money back. Obviously, if your loans have defaulted, that Funding Circle doing these government-backed loans isn't going to really be a help to you. But what it does is it allows loans that are in good standing to continue to be repaid, because Funding Circle has the resources to keep on pushing forward as a business. So I do see that as an advantage. And if I was a Funding Circle investor, which I am in a very small amount, I want my capital to be preserved as as much as possible. Not really thinking about Funding Circle as being a long-term place that I would want to invest my funds in peer-to-peer. So yeah, Funding Circle again offering government-backed BBL. I can't remember what that stands for. It's like something lift, business lift loans, and CBILS loans, and as well as Assets Capital too, being another lender that has now been authorized to offer these government-backed CBILS loans, which is good news for them. Let's see what we've got here. Let's see. David says, what about national savings income bonds rather than premium bonds? Currently 1.16%. I mean, you're really just scratching, aren't you, for interest and yields at the moment. Imagine the difference between a savings account and a bond now is just so minimal, and 0.25% of interest difference is, unless you're talking about millions of pounds, you're talking about just such small amounts of money, a few pounds on 1,000, that I don't think I would tie up my money in any type of bond at the moment. It just doesn't make any sense, because if rates do move in the next 6 months, you'll be able to, move your money around, and those national saving bonds, you get tied into them for, I think, a year minimum. And to get an extra not even a 0.25% interest, you can still get about 1% on a savings account. So as long as you don't have more than £85,000 in any one given savings account, I don't really see there being much downside to just putting your money in a savings account if you're worried about risk. Be careful too about that, because some of the banks fall under the same FSCS licenses. Saga is one of them, and Marcus, which is owned by Goldman Sachs. So if you had 85K and you were, say, a single person, you had 85K in Marcus and 85K in Saga, you would only actually be covered for 85K, because Saga and Marcus run under the same banking license. So you can go and check on that and just make sure that you have your money protected, that you don't have too much under any one banking license. But yeah, I've never been a big fan of NSI. I'd rather honestly take my chances in an index tracker, or even maybe a bond fund, and just, trying to get out a couple, 3% in one of those bond funds might be a better play. Annabelle says, nearly 85 and still likes getting a 25-pound check in the post. I'm presuming that's your mother. Yeah, premium bonds are like older people's gambling. They get to have a little bit of a flutter, and keeps them happy when they get that money in the mail. But again, they don't realize how much money they're losing in lost returns over the periods of years that they've had these premium bonds, and getting literally 1% in returns on them. That's why I'm not a big fan. John says, I mentioned crowd property and I've been looking at it, and reviews are good, but would like other comments from any users, especially approach regarding and operational aspects. Yeah, I like Michael Bristow. If you want to, you can go on and look at the question and answer session that I did with him. There's a 3-part Q&A on my YouTube channel. That's really the best summary, I think, of what he does in his business. And I like crowd property. I think that they're experienced. They've got a good team. And I don't have anything negative to say about them right now. So they've had good feedback. They've been operating for a while. They seem to be doing things the right way. So yeah, as far as property-backed lending, that would be a good spot to watch. I just haven't invested there myself, and that's honestly just time. I've had so much going on with the website that I just haven't taken the time to go ahead and pop some money in there yet. It's actually right here on my list of things to do, but I'll get to it. I'm probably going to put a bit in there. Running the website is, I do that solely on my own. There's lots of information I have to keep up on. Some of it investments that I have up to date. So sometimes I don't always get to invest in these new companies through time restrictions that I have and running the website, doing the videos and stuff. So, but yeah, I would put some money in crap property myself when I can find some time to do it. Stephen Hale says, hi from Nottingham. Should have been holidaying in Florida last week, but not being American, not allowed into the country. Nowhere is open. Yeah, Florida's be opened up at the moment. They've started to allow people back into the restaurants again. 25% occupancy now in restaurants with outdoor seating. Some of the areas of some cities have closed down through roads, and they've put restaurant seating out into the streets to try to get those companies' revenues back up. So I like that. Yeah, it's a good thing. Obviously, COVID's a nightmare. I mean, it's really sad what's happened. But eventually the economy has to be opened back up, and America's just not a place. And the UK that can really afford to be shut down for too long. It's a tough balance for politicians to make. I'm not a big fan of politicians, but I could see they just have this hard balance between people's safety and keeping businesses afloat. So it's a very tough balance, very sad what's happened. So, yeah, if you have any questions, again, pop them in the comments. I'm just reading through. Alan says he ditched his premium bonds a while ago after a 12-month drought of no winning and bought some index trackers. Yes, I think that would be a wise move in the long run. Good job for doing that. Aki says markets have dropped their savings rates. Yes, I think they will continue to drop too. Now the norm is going to be anything from 0.1% to you're lucky if you can find a percent. I don't think 1% will last for very long. So Martin from Leeds says, so some good news at last about Funding Circle. Hi, Martin. How are you? I don't know if you know some good news that I don't, but so Tony says in Assets Capital that his money is in the business and property funds now closed, and they're not accepting new investment to these funds. Is it possible for me to withdraw from them? You can't. To be honest, I'm not. When you're saying business and property funds, I don't know if you can clarify. Are you talking about the GBBA, which is the Great British Business Account? That one is closed down. You can't invest anymore. I'm not actually invested in the property fund. So what I personally am doing, I do have money in the GBBA, which is the business account. I'm just letting it run out. I think the position that Assets is in right now, I think they're not a bad place to be. So I'm not, trying to run for the exits with them. I think they might be one of the better places to have your peer-to-peer money at the moment. So Tony, I'll log in and check on that. I don't know, because I've never tried to access from the GBBA because it's closed. I just sort of let my money run out from there. So Wayne says, evening from Kent. What is your current view on Blend Network? I noticed your website shows you do not invest with them at the moment. Yes, actually, they're another one that I like. I like Blend Network. I think that Jan is a very, very smart individual in the alternative finance space. I've been to meet with him a few times in London. And, honestly, for me, the reason why Blend hasn't been a place that I've put money is just diversification. They do have quite a high minimum for each investment. I believe £1,000. And to diversify correctly within Blend, I would want 10 to 20,000 in there. I just don't have the extra resources at the moment to put that towards Blends. But I was thinking about it the other day, and I thought, I'll probably just maybe buy a few loans from Blend, not necessarily the 20,000's worth, but I do believe that they have a really good business plan, And Yan is very good at risk management, which is really important in peer-to-peer lending. Risk is the grew up that has caused poor risk evaluation with Landy. Don't get me started. I'm going to have to rant about what's going on with them because they've just pulled the wool out over bullseyes. And anyway, I'll talk about Landy, but Blend, I think risk management is one of Yan's strong suits, and I would be completely happy investing through Blend. So BBL bounce back loan, yes, thank you for that. That's exactly right, Peter. That's the government-backed loans that Funding Circle and I believe Assets will also offer BBL loans. Chris Monk says, is now a good time to drip feed funds into a couple of tracker funds at the moment? Yes, absolutely. It's a good time. You want to do it, drip feeding is not a bad thing because I do believe that the stock markets have not seen their worst. Like any investment professional, which I am not a hedge fund trader or anything like that, but I do believe that we don't know what's going to happen with the stock market. But if you look at general economic data that is coming out, everything is pointing to disaster. Things have just been terrible for the last 3 months, and it doesn't look like it's going to get any better. The travel industry is going to be under severe pressure for the next God knows how many months. I mean, it's probably going to take the airlines years to recover. Travel and tourism is a huge part of countries' economic well-being, and you just have to look at the numbers and say unemployment's gone up, travel industry's decimated, people are not going out and spending money, so the stock market, how could it be doing as well as it is? So that's why I believe that the markets have a good possibility that we've not seen the worst, and cost averaging into index trackers at the moment, it will be a good idea because that way if the markets do fall further and further, you are instead of putting a lump sum in, pound cost averaging, or buying a little bit each month, buying whatever you want each month, allows you to go through those averages of the highs and lows. So yeah, I would definitely think it's a good time. And also some Bitcoin too, which is I'm gonna talk about why I think the Bitcoin is something that probably should be on your radar now. And I honestly didn't think that a couple of years ago. I actually looked at Bitcoin in 2011. I'll never forget the day. I was in my attic writing a book with a professional gambler, and he pulled up the computer screen. This guy was really into all kinds of alternative money and investing back then. He showed me Bitcoin, and it was $2.55 or 60 cents at that point. And he said, Lawrence, we need to put a grand into Bitcoin. We'll just split it half and half. We'll take a gamble. And I looked at him, and I said, his name is Dutch. I said, Dutch, you're crazy. I feel like I'm just literally throwing money into the toilet and taking a leak on it and flushing it away. What is this Bitcoin nonsense? Look what happened. Yes, 1,000 pounds in Bitcoin in 2011 would have now been worth millions at this point. So I always kind of poo-pooed Bitcoin, thinking I just didn't get my head around what it could do, what it was useful for. People didn't use it. It was volatile. But now, through research, I have completely changed my mind about Bitcoin, and I'll kind of talk about why a little bit further in the stream. So if you are interested in learning a little bit about Bitcoin and why you might want to look at it, hang about. So yes, I would, Chris, definitely recommend some dripping into tracker funds. Always. Huge fan of tracker funds. Just because the fees are so low. I mean, you cannot, you're just going to make money and save money from fees. If you're in a managed unit trust or a fund, you're going to pay fees. You don't pay those high fees in index trackers. So imagine if you have a financial advisor that charges you 1% a year, and you have a managed fund that charges you 1% a year. Right there, you're 2% behind. So if your fund makes 6% gross, now you're making 4%. An index tracker is going to do most likely as good as a managed unit trust, and it's going to save you about 1.9 or 1.8% in fees. Index trackers tend to do, they tend to follow managed funds. I mean, not everything, but if you look at a large cap a large cap managed fund versus a index fund just with equities like an S&P 500, they track each other almost identically, because the managed unit trust managers are just buying the same stuff that makes up the biggest part of the index trackers, which is Apple and Microsoft and Google and Amazon and a little bit of Tesla. So they just follow each other. You just get absolutely destroyed on the fees. DJ Sam, hi. How are you? Welcome to the stream, Sam. Chat with Cufflink is not going to take place until Monday or Tuesday of next week. So I have a meeting with Amy Holborn and Narinder, who is the CEO, and likely Harry, who's the CTO. So I'll be able to tell you next Thursday what's going on with Cufflink. Paul, what tracker funds would I recommend? The only two that I buy, Paul, are the Vanguard US Equity Tracker Fund, which you can get through Vanguard UK. Fidelity also has a total market fund. It's called. Any of the US ones that track the total market of equities of Fidelity or Vanguard are fine. HSBC has one too that's been performing pretty well too. So, and then as far as a bond fund, I just buy the global Vanguard Global Bond Fund, which is made up of a lot of government bonds with some percentage of corporate bonds. I definitely wouldn't invest in a tracker that track mainly corporate bond funds, because you are essentially investing in private businesses, and those businesses, especially now, could be really in trouble through the amount of debt that they're accumulating. So I do prefer the government bond funds if I'm going to invest in a bond fund. And I just remember the bond funds can go up and down too, but they're not going to be nearly as volatile. When bond funds do tend to perform worse is when the interest rates start to rise. And I just don't think you're going to see any real spike in interest rates anytime soon. So a bond fund might get you, on average, you might see years where bond funds will do 8-9%, but for the majority, you'll be looking at 3 to 5% on a bond fund over the long term. So, yeah. So, David said you're not tied in at all with National Savings Income bonds, instant access. No, well, yeah, sure. I mean, so I don't really use NSI bonds because I just always thought savings accounts almost give you as much. If I can get 1% in a savings account and I already have one open, then I'm just don't bother with the NSI. But yeah, if you can get instant access, you already have an account open, then sure. Yeah, it could be an alternative to a bond fund. Just remember, when you have a lot of money stashed in savings over any long period of time, you're going to lose to inflation. So you don't want to have more than you need stuck in a savings account, even during times of stock market volatility, because you're better off having that money work for you if you don't need it for the next 5+ years. If you need something in the next year, I wouldn't have any of my money in a tracker or anything tied to a stock market investment, because you could lose a big percent of your capital that way. So, but if you can, you don't need your funds for the next 5+ years, preferably longer, then I would favor putting anything that I had available into an investment versus a savings account or an NSI income bond. Andy says, really enjoyed the book you recommended. Yes, Andy, he's talking about The Little Book of Common Sense Investing by the Vanguard founder, John Bogle, which really breaks down, why you want to have index trackers versus managed funds. So it's a great book. I highly recommend anybody goes and picks that up. It's a really easy read. It's a little bit repetitive. It basically says the same thing, just buy index trackers because the fees are low, and index trackers don't have fund turnover, which triggers lower capital gains taxes because they're not churning their trades on the stocks every week or month like they are in the managed funds. What managed funds do is the hedge fund or the managed fund manager, he's always looking for stocks to trade in and out because a lot of capital gains if the fund's doing well, which creates more expenses for the fund, which for you as an investor is a negative. Index trackers don't do that. They tend to hold. They might have a sort of a 14% fund turnover versus 100% fund turnover of a managed fund. So just a question. So Andy says he really enjoyed the John Bogle book. And just a question on your investing, why you only invest in the USA, not diversify into different markets. I have a article about why. The reason being is a global index tracker over the long run has been a little bit up and down. I've tracked it. I don't have the specific numbers in front of me, but if you go to my website, I'll find the link for you and put it in. But basically, if you try to pick individual markets, so like for instance, you pick the UK FTSE, you're going to see that the FTSE has just really underperformed the US market for years and years and years. Now, obviously, it depends on market timing because if you go in at the wrong time, yes, you could get lucky and do better through a European fund or the FTSE. But for the most part, if you look at very long-term tracking charts on analysis of growth on US fund tracker versus the global or the UK or the European index trackers, they've really underperformed. So it's really about performance. And the only thing we have to look at is historical numbers. I mean, if you look at the world markets, you could take a gamble in China, sure, or India or emerging markets, but I like American companies. I mean, you've got the most powerful companies in the world based in the US. And of course, China has some too, but I don't want to invest in China personally. I think it's an unstable country that anytime the government decides to change something over there, the company could retract in their economic growth. The US, you've got the main staple tech companies. Tech is just going to be huge over the next 20, 30, 40 years. Everything is going into the tech direction. So, having companies like Google, Facebook, Amazon, Tesla, Microsoft, all these big US companies that are tech heavy have done well, and they're going to continue to perform. And I just like the US market for business. It's always been a good place. It's a country made up of entrepreneurial businesses, and I think that the US market will continue to thrive over the long term. Sure, you're going to see short-term volatility because of COVID, but over the long term, I think the US is a place I feel comfortable. Another thing to do is you could put your money into a global bond fund and some of it into a US fund if you wanted to hedge it. You could do a 50-50. You just want to watch because some of the global funds are pretty heavy weighted in US anyways. So sometimes you can do global minus US and then invest more into the US side of a tracker. No, I don't think none of those are a terrible play. Global versus US. I don't think you're going to lose badly if you went into a global or I just European. I had money invested in the European tracker for a while. It just wasn't doing anything. And even my international tracker that I have is in the negative now versus the US ones that have performed better. So that's it. John says crowd property loan under 300,000-ish was taken up in less than a minute. Was some of this institutional, do you think? No, I don't. I think that crowd property is very popular and the investors like the platform, and the loans just get snapped up quickly. So let me see what else we have. Lots of comments. Thank you again for joining us. Please hit that thumbs up button if you can, because it helps me with the YouTube search. Scott, I'll give you the latest on Lendy. I'm annoyed. Um, I feel I get a lot of emails from people that have invested in Lendy. I've invested in Lendy, not a huge amount of money, but I get it makes me upset. It makes me sad because I feel like they really pulled the wool over people's eyes, and um, you know, I wish I'd have been more eagle-eyed with what was going on. I just missed, I don't know that I missed it. Just the information they were providing me was different to what was going on the outside. And I got an email from somebody this week, and I don't know if you're watching, but if you are, you'll know who it is, that he had most of his life savings in Lendy. And it just, I don't know. I'm just so upset about it because to hear that somebody had their life savings in that company and the company mistreated their investors, like, it makes me sick. And sometimes I'm a little bit fearful to give you my opinions about something because I don't want you guys to go out and make an investment that's not good for you, because I do care. I care about what happens to people's money. This guy had worked his whole life to save up. And, I mean, diversify, please. Please, just if there's one thing you get out of reading my website, is just diversify. Don't put too much money into any one single investment. And that goes true for a stock. If you're putting all your money into Amazon, just know that there is a risk that Amazon could have something disastrous happen and you could lose everything. I mean, unlikely, but, and again, it's kind of unlikely in peer-to-peer that now going forward that a company will close its doors like that. But yeah, Lendy is, what they did this week is they consolidated their provision fund, the administrator, RSM. And it just makes me sick. They had 1.5 or 6 million pounds in this provision fund in cash. And the administrator went through and did whatever they did in the back end with the FCA, who I think is just, the FCA is just not acting in the best interest of investors in any way. And that's scary. The FCA authorized Lendy to operate in the way that they did. Obviously Lendy kept things hidden to some degree, but the FCA is, even now through the administration, they don't have the investors' best interest at heart. And they've shown that because of what's happened with the provision fund. There's 1.6 million that was in there, cash, and £1 million of that went to pay off a bank, Metro Bank, and 45 grand went to pay RSM, the administrator's fees, and then there's 480,000 left in cash from that provision fund. And likely what's going to happen is that 480,000 is going to go to Lendy. And that just makes me sick. And look, I take full responsibility for my investing. When I place an investment into something, I take the responsibility for that. I made a choice to do that. But that doesn't mean that I'm not going to sit here and say that what is happening with these companies that are in administration isn't making me sick, because it is. And I'll take that responsibility for lending. And I think everybody has to. But we're told certain things, right? They advertise, these companies, that no investor has lost money and that they're putting on these loans that are valued correctly. And the truth of the matter is that some of those companies, not all of them, because there are peer-to-peer lending companies that are doing things right, but companies like Funding Secure, Lendy, and Collateral have done things absolutely wrong. Absolutely wrong. And it makes me sick. And I'm just disappointed. And I'm sad that I get these emails from people, that have lost a lot of money in these companies. So Lendy, yeah, the directors, what also in that report, if you go to my Facebook group, you can see I put a link up there to the actual document so you can see it, or I'll go to the Lendy Action Group. They put it up there too. But, essentially they've just said, the FCA said the directors of Lendy have done nothing. We are not going to investigate them any further. Whatever their reasoning is, I don't know, what they know or don't, but for a company to put in a waterfall provision like this in March of 2018, and then in July 2018, the FCA gives them the approval, there's just something that's not right about that, because that waterfall essentially said, what if we go into administration and the administrators recover money, Lendy gets paid first before investors, and Lendy's going to get paid millions of recovery amounts, and the investors are left probably with very heavy losses. So yeah, it's just wrong. So that's all I know so far. Yeah, my hope is with Lendy that the Lendy Action Group legal suit that they have against the RSM administrators will turn into something, but I just have a feeling the RSM fees are going to be so high, they're literally going to be £2 million in fees. So it's a shame. I hate it. And I feel bad. So rant over. Richard, so there you go, Scott. That's my update. Richard, hello from Espoo, Finland. That really is an unfortunate name for a town, Espoo. Glad you're able to join me live for the first time, Richard. Welcome to the stream. Where is Chica Boy? I don't know where he is. He's usually here every week. Hi, Norman from Sussex. Martin says the good news about funding Circle is the news that I told you guys 5 minutes ago. Yeah, that was about the them accepting CBILS and BBL bounce back loans, which will be good for their revenue. Not saying I like funding Circle anymore. I'm just saying it'll be good for their revenue, which will hopefully allow you as an investor to get paid back over the long run. MP says, any clue when assets will be launching the secondary market, where users can trade their access loans at a discount or premium? It's been about 2 weeks since the CEO made the announcement. I would say within, if I had to take a guess, the next month, but they haven't told me when. Norman says, I withdraw money from assets by making all my accounts withdraw, all getting around £120 a month. That's good news. Yes, I think assets is going to be fine through this. Assets capital. Okay, thank you, Me Too, for that information about assets and exiting. Dominic says Vanguard index funds are good. Yes, I agree with you. I have lots of info on my website about those. DJ Sam says, unbolted, you're looking for a cashback. I have a link on my website. If you go to financialthing.com and click on the cashback offer, let me have a look. I'll give you the link here. You can see what they have. Oops. 1 second. If you're looking to get into investing, LoanPad has a pretty good offer at the moment. By the way, if you want some place to put your money. But yeah, check out that Unbolted. I think they still have their cashback going on, but just check on my link and email me if you don't see what you need there, and I'll get you the information. It's help@financialthing.com. Norman says, I do not think now is the time to put money into the stock market. It will go down again before it goes up. Well, so Norman, the problem with that thinking is, how will you know when the down point is? Because when I was looking at the Dow when it was 18,000 points, I was thinking it was going to go down to 12. So I was kind of sitting on the sidelines at that point. That's why I like the idea of putting in cost averaging in. So if you've got 10 grand that you want to invest now, put £1,000 in for the next 10 months. And that way you'll hit those downfalls and those upswings, and you'll average out in the same way. You might get lucky doing it the other way, but you just don't ever really know where the bottoms or the tops are in the market. So trying to market time is just essentially impossible. But yeah, I agree with you. I think there's a good possibility, Norman, that the market goes down from here. Me Too says they're saying there will be famines in the third world as a result of all of this disruption in the first world. Yeah, it's definitely something that could happen. It's a shame. Tony. Okay. Let's see. It's just reading your comments here. Bit more sophisticated than usual this evening. Thanks. I think that's a compliment. My hair is not sophisticated. I'm still in the having the COVID haircut. Yes, Chris, I'll get to the Bitcoin in a little bit. John says your portfolio has 11%-ish property moose. What are the attractions if you still like? Okay, so property moose, yeah, the property moose was a share, sort of where you'd buy shares in property. And with that, what do I like? I like Andrew Gardner. To be honest with you, I sometimes I just go off of gut feelings about people who are running the companies. I've met Andrew at Property Moose several times. He cares about investors, and if I'd have exited the investment, I would have taken a pretty large hit. And I just thought, you know what, I'm just going to leave it and let it ride and see what happens. So that's more of a faith bet on Andrew, who runs Property Moose, than it is on the actual investment. Do I know if it's going to be a good investment long term? I don't. But I'd rather just sit and let it ride than take a loss at this point. Yes, Norman, everybody does need to diversify. It's the single biggest important thing in investing, not just in peer-to-peer. You know, it's like if you're going to go buy stocks, don't just buy Apple and nothing else. Sure, you could hit the home run, but you could also really suffer. Does any peer-to-peer lender have investors' interests at heart? Yes, DJ Sam. I believe that there are many of the peer-to-peer companies that do. I think that some of them have just made some lending mistakes. And I don't think any of them really, not any of them. Some of them maybe wanted to take the investors for a ride like Lendy. But I think that the companies that I have dealt with, who I think do have investors' best interests at heart, are, LoanPad, Louis, Andrew Gardner. I think the Cufflink people do. I think that I've met Rate Setter's chief investment officer Mario a few times, and I think they do too. I mean, it may not look like it from the outside. So Rate Setter, I think Assets do it over at Assets Capital has investors' best interests at heart. Yana Blend, Crowd Property Crowd also. There's lots of them. I think don't let a few bad apples ruin the barrel of peer-to-peer and crowdfunding. And just understand that there are risks involved, like anything. Norman says, how is LendInvest different? And why do I like them? LendInvest is different because it's not strictly a peer-to-peer lending company. You're actually lending money to LendInvest, and they're investing it for you. LendInvest is a very big company. It's not just their property peer-to-peer side. They have pretty deep institutional pockets of funding, so they're well funded, and they do risk management well. So I think they're a profitable company, which is really important. So that's why I like them. Do you know if RateSetter are going to go for a banking license? Aki, I don't know. I haven't heard anything. And he says, I myself invest in different index funds for global exposure. Yep, it's not a bad choice at all. How confident, Paul says, am I in the future of RateSetter? Look, if RateSetter failed, it would really be disastrous for the peer-to-peer lending in general. So I'm pretty confident that they're going to be fine. That's just my opinion. David said, have I seen the media discussion about the planet paying for COVID or an orchestrated one-off move involving countries printing money to buy their own debt and then writing it off? No, I haven't, David, but it doesn't sound too far-fetched. Dominic says, what happens if RateSetter goes bankrupt? Says they have a fully funded plan in place to ensure that loans wind down smoothly. Yeah, it'll go into administration. RateSetter's business model is based off its provision fund, so it would use that to wind down. Look, I don't think RateSetter is going to go bankrupt, so I'm not too concerned about it. Eamon says, for a better bond returns, worth looking at Wise Alpha. I've made 6% yield over the past few years without taking too much risk. Decent liquidity, even in the past couple of months. Yeah, I actually met Wise Alpha when I was in London last time. I have a video that I'm going to be putting up with my sit down with the boss of Wise Alpha. Yeah, the thing about Wise Alpha is you're investing in basically corporate bonds, which you're getting 7% because you're taking pretty decent size risks. You may look at some of those companies and think, well, could they really fail? But I think some of the bonds in there they obviously have risk. I think Aston Martin is one of the bonds you can buy in Wise Alpha, and who knows if they're going to be okay. So yes, you'll get a decent yield, but don't think you're not taking risk to get 7%, because there is risk that comes along with getting 7%. Even if the bond is backed by a company like Maserati or Aston Martin. Matthew says, if I exit RateSetter and it takes months, do I still get interest until my loans are sold? Yes, you do. Yes, you do. So that was an easy one. That was the easiest question, Matthew, that I've had all night. So we'll just go through a quick sort of recap of what's going on in the markets we've seen. RateSetter I don't really have too much news about. There's nothing that's happened this week. LoanPad has LTV of 30%, which is really low loan to value. They still have good liquidity. They've got one loan in default, 5 extended loans, and the average loan size is about £341,000. I got a email about RateSetter's provision fund called the ICF, which is the interest covered fund, which is not very large. I can't remember the exact amount, maybe 40K. But just remember, LoanPad is not a provision fund-based company. They have that interest covered fund sort of as a little added bonus for investing through there. But you would need to have a provision fund of about £500,000 for them to cover everything. And if they did that, you'd be receiving very much lower amounts of interest. Also, Louis just really believes in his loan and his loan provider Hans, so he doesn't feel that having a big provision fund is really necessary for a LoanPad at the moment. So Growth Street, yeah, Growth Street, I don't know. I just don't feel really great about Growth Street. They have reported that the losses for 2019 were about 1.8 million. The provision fund right now has £876,000 worth of claims, and they have about $650,000 in cash. I'm hoping for the best with Growth Street because, obviously I don't want to see anything happen to them, but See. Certainly don't feel like if I was putting my mother's money out right now, I wouldn't go into Grove Street, even if you could, which you can't. I was doing a little research on money thing and funding secure. There's another company that I'm pissed off about, if I'm being honest, because one of the loans that I was invested in, and what I used to do with funding secure is I would sort of shotgun spray investment pieces around. I would never have too much money into any one given loan because I knew the high risk nature of funding secure. And I thought, oh, I'm just going to put across a bunch of different loans. And I knew some would default. But the things that have come out in the administration have really just been the incompetency of the people that issued these loans again. If I was investing any significant amount of money into a single loan, I would have done a lot more due diligence on the loans, but I wasn't doing that. So, for instance, one of the loans that was in default, and this was a development plot. And looking back, I just don't advise investing in development plots. It was when I was very early on in my investment stages, I was doing that because I thought, oh, land in England is not. There's just not a lot of development land, so it's worth, probably what the valuers say it was worth. And it turns out funding secure completely screwed up their valuations. Probably because they didn't know what they were doing. But they had a development loan. It was a development piece of land that they liquidated in the administration for £150,000, and they had given out a loan of $899,000. So one thing you need to know about companies that do development loans is that if the company goes into administration, there's a lot of things that go wrong. For instance, funding secure is having some issues with their borrowers who are taking funding secure administrators to court and saying the loan documents weren't written correctly, or they're delaying the administration process on defaulted pieces of land. Borrowers can really throw a spanner in the works when it comes to holding things up in the administration process. So you just need to understand that if one of these property-backed lending companies who's not doing things sensibly goes into administration, there's just a ton of problems that can happen. And a lot of the times you're going to see situations where the pieces of development land are liquidated for far less than the loan value, and investors end up taking a haircut. So, yeah. MP says LoanPad looks like one of the more reliable P2P companies given their business model. However, one thing that makes me nervous is that malls are in structural decline. COVID accelerates this. Malls. Yeah, maybe you can elaborate a little bit more on what you mean by that. Obviously, yes, malls are in decline, but LoanPad, from what I understand, is more about residential lending, not so much commercial. Paul, how do I buy Bitcoin? Yeah, I'm just going to change it up, and yeah, I agree. Funding secure. Let's talk about Bitcoin. So, I used to think that Bitcoin was like this black hole of investing because I didn't really understand. If your consumer didn't know how to use it, how would it ever be useful for anything? Now, what I'm learning is, and this has been really magnified through COVID, every time the government prints money, they're essentially devaluing the currency and the fiat. We call it fiat currency, fiat being dollars, pounds, euros. So governments are just printing money to mask this problem of the economy, and they're just accumulating more and more debt. And this has really been something that's we all know is increasing, but it's never being addressed, and it's getting worse and worse and worse. What Bitcoin does is it solves that problem because it's essentially a limited currency supply. There can only ever be 21 million Bitcoins, right? I think the last Bitcoin they're saying will be mined in 2034. And it makes the digital currency actually seem really attractive because if you can't print more currency, you can't make more Bitcoins, then it essentially takes government's control over currency out of the equation. Now, government control over currency can be a good thing, but it also can be bad. If you look at Venezuela, Zimbabwe, what's going on in those countries, inflation is just out of control. Happened in Germany during the Nazi occupation. It can happen. Don't think for a second that any country is immune from incredible inflation, because it could absolutely happen. And part of me is thinking, Bitcoin could really be the answer to these problems. Take away the government control, through this supply. Global economies are just a huge mess. So I thought, judging by what's happening with Bitcoin, there are some people that say the Bitcoin could be worth anything from 100,000 to $10 million in the future in the next 10 to 20 years. And I don't think that's inconceivable. I also think the Bitcoin could be worth zero. If the governments were to try to control Bitcoin and cryptocurrency, there is a possibility that crypto or Bitcoin could actually decline to absolutely nothing. The way they could do that is government could impose control over things like payment processors and banks, saying, if you want to buy Bitcoin, it's illegal now, so there's no way to buy it. Now, I don't foresee that happening, but the Americans, they did it to online poker in 2011, essentially saying it's illegal to invest, to deposit money into a poker site. So you essentially shut down the entire online poker system in the US. So governments do have the ability to control things like that. The reason why I don't think that will happen with Bitcoin is because you've got too many heavily invested, investment weights who are really starting to get interested in Bitcoin. And I always say, don't look at what investment professionals say, look at what they do. JP Morgan was an example of this, where the CEO, I think his name is Jamie Dimon, was saying Bitcoin's a fraud. And then it turned out that JP Morgan was buying Bitcoin ETNs, exchange traded notes, XBT shares, and then JP Morgan goes ahead and launches their own crypto coin. Also, look at Facebook. Facebook is now looking, they've got this Libra project, which they were going to launch their own crypto coin, Libra. And Facebook has an incredible pull in the global social media world. Billions of users who are Instagram, Facebook, and then being able to spread Libra would have been, quite eye-opening. There would have been billions of people that are exposed to this cryptocurrency. And what happened with Libra was you had this government intervention and pressure that was put on them, saying, we want you to change how Libra works. And they did that. So you've got that. You've got companies like Microsoft and Starbucks accepting Bitcoin as a payment. You've got billionaires like Mark Cuban. If you don't know who Mark Cuban is, he's on the US version of the Dragon's Den called the Shark Tank. He's a billionaire, and he accepts his professional basketball team accepts Bitcoin for a price of tickets. You have Fidelity, the brokerage now, which has a crypto trading platform. And Fidelity, incidentally, has been mining Bitcoin since 2014. You've got Samsung Galaxy phones now have a crypto wallet. And I think in the next 4 to 5 years, you're going to see every smartphone that will have a cryptocurrency wallet. So Paul Tudor, he's a billionaire trader who he's been buying Bitcoin for a while, and so when you follow the money and what's going on with Bitcoin, these people are not stupid. They know. They might tell you, like Warren Buffett has told people, Bitcoin is a waste of time. Bill Gates, Bitcoin is a waste of time, but they have good reason to do that. So I believe in my heart now that Bitcoin is probably going to be a very, very highly used currency in the future, and could really, really be worth some money. Now, it's highly volatile, so I was always looking at it thinking, If Bitcoin's so volatile, how could it be used as a stable currency? It couldn't. What my argument to that is, look at the internet back in the 1990s. For anybody that's older like me, I was using dial-up modems and things were just highly unstable. And nobody ever thought that the internet was a place where we'd be sitting and talking to each other now, or where we would look for business opportunities, where we'd be able to sell things, where we would interact social media with all of our families, where we would trade stocks, where we would do peer-to-peer lending, where we would find love through dating sites. Nobody ever thought that was possible. And I think this goes the same for Bitcoin. I think that once things stabilize in the future, once there's more of a supply of Bitcoin in the market and it evolves and innovates and more, it's going to be something that becomes less volatile. So the good thing about Bitcoin is you don't really have a high cost of entry. Nobody needs to own an entire Bitcoin. You can buy small pieces of it and put it in a few £100 or £1,000, a couple of thousand. And if it did happen to hit $1 million or $10 million, I mean, you've got that super high reward rate. And if it doesn't and nothing happens with crypto and it gets controlled by governments, then your downside is relatively small. So that, you just couple all of those things together and it just seems like Bitcoin might really be the way of the future. And I just remember that Bitcoin is just a brand. It's like Colgate of toothpaste. Cryptocurrency and blockchain, there are other coins out there you can buy. I personally don't believe that any of them are really going to be what Bitcoin could be. And that's just a, personal opinion. I do own some other coins in small amounts that I bought a few years ago. And some of them have been reduced to practically worthless amounts. And some of them have, reduced in amounts that have been similar to the Bitcoin volatility fluctuation. So that'll be my reasoning for taking a look at Bitcoin, and particularly because of the government control and what's going on with currencies now has really changed my mind about it over the last few months. So my strategy personally has been to cost average into Bitcoin. Just buy a little bit whenever I have some extra funds. £100 here, £100 there. I certainly wouldn't put my life savings or any significant part of my liquidity into Bitcoin. But, I do think it has some legs, and it'll be really interesting to see in the next 10 to 20 years really what happens. I would not be surprised at all if Bitcoin were to go to $1 million per coin, just because of its limited supply. And by the way, the other good thing about Bitcoin is it's so far been unhackable. And I think it's one of the few things digital that is actually proven to be unhackable. So I'll never forget 2011 looking at that Bitcoin price of $2.50. Who would have thought that it could have risen all the way to 19,000? So anything is absolutely possible when it comes to it. And I think it's worth a punt. I do. That's my take on Bitcoin. And the places that I buy it through, you have to be very careful about that. Coinbase, I think, is a great place. It's a place that I trust. If you do want to buy Bitcoin, do it through my link. I do get, I think, a little bit of Bitcoin if you do that. But you can use Coinbase in the UK. I'm not sponsored. They don't pay me to do this. It's just who I use. The one thing I would say is if you are going to buy through Coinbase, do it through the Pro platform. The fees are about half the cost. Now, that's the one bad thing about Coinbase. The fees are a little bit high. It's not too bad, but the fees are much less through the Pro platform, and you can transfer your Bitcoin instantaneously once you have it set up from your Pro account back to your regular. So I just buy in Coinbase Pro and then move it back to my Bitcoin wallet. And it's, by the way, if you want to send people Bitcoin, it's so instantaneous. You just give them your wallet number and they can transfer stuff to you, Bitcoin, through a matter of seconds, and there's no fees to do it. So it's a really easy system to use once you get your head around it. It just seems complicated. So there you go. That is Bitcoin. Let's see if you have any other questions here. Does Scufflink have a provision fund? No, they don't, because they invest their own money into their loans. So consider that a first loss. So they take the first loss on, if something happens to a loan, it goes bad, they'll take the first loss, which is their equivalent of a provision fund. John says, a prompt for watchers tonight to join the Financial Think Facebook group. Totally agree. Yes, please join the group here and we can interact that way. So there you go. Dominic says, doesn't believe Bitcoin will be used as a currency, but maybe some other kind of crypto could be used in the future. Yeah, I disagree. I do absolutely think it's going to be used as a currency. It's the one that most people know about. The reason why is because millennials they've done some studies and polls on millennials, and I think in the US, the 65% of millennials trusted Bitcoin over gold. Millennials know about Bitcoin, and there's a good percentage of them that own some of it. So it's highly adopted. It's highly adopted, and it's well known. What you're going to see, the younger generations, Gen Xers, and millennials in the next generation are so internet based that they understand digital, and digital currency makes so much sense to them. Like gold doesn't. You try talking to an 18-year-old about gold, you say, hey, what do you know about Bitcoin? Chances are they're going to know about Bitcoin. So this is why I think Bitcoin will actually be used as a currency, because there's going to be a lot of adoption of it by younger people and the upcoming generations. David says, are there Bitcoin tracker funds? There are cryptocurrency tracker funds. Personally, don't use them because I don't want to own a bunch of cryptocurrency that I don't think is going to go anywhere. Yeah, Paul, I put the Coinbase link on below. If you want to buy, you can do it through this. I'll probably put up an article in the next week. I'm still doing some research on it about, what the stuff we talked about with Bitcoin and why I think it's a good reason to look at it. Ken says, what's the best way to own a Bitcoin? I was told Revolut take 1.5% when you buy and 5% when you sell. So a round trip users use 6.5%. Ken, if you use Coinbase Pro, the fees are relatively small. I think it's about 1.5%. And I'm absolutely doing this to buy and hold, not to sell. So, and to be honest, 1.5% on something, if you believe it really has a future and it could go to 100 grand, it's 9,000 right now, or $1 million. That 1.5% is just nothing. So I just pay the fee. Dominic says the Binance exchange was hacked and lost 31 million. Yeah, okay, but that was the Binance exchange. That was the platform that got hacked. It wasn't the Bitcoin that got hacked. So what you want to do with Bitcoin is you can get an actual hardware wallet and download your Bitcoin into your wallet, and that way you have complete ownership. So if Coinbase or Binance were to get hacked, you would be completely safe. That's what I recommend doing, get a hardware wallet, because any website could get hacked at any time. I think Coinbase has really strong security. They can't afford for that to happen. Binance was a little bit of a, I wouldn't say they're as secure. I mean, they're not, because they got hacked. I never liked Binance when I looked at them. I thought it looked a little bit unsecure. Amos says, what's to stop the founders of Bitcoin launching Bitcoin 2 once 21 million are issued? I don't accept the digital scarcity argument. There's nothing to stop them, absolutely, but there's some people that believe the founder of Bitcoin is gone, that he's either died or doesn't exist anymore. I don't think you would see any more being issued, but it's always a possibility, and that's why I say I wouldn't put my life savings into it. For a few £100 or £1,000 punt for the chance for this to grow and grow and grow, it's you're not really taking that much of a risk. I personally don't ever see 21 million ever see an issue again of more Bitcoin. I just don't see how that could ever happen. There's always a possibility, but don't see it. Thank you, DJ Sam, for the thumbs up. I appreciate that. Yes, Dominic, absolutely. Buy it. If you're going to own any crypto, buy a hardware wallet and secure it in a safe place, because you need to have control over it, because any website can get hacked. I mean, also, Lendy was a great example of why you want to keep good records, because when the website went down, there was Collateral. When Collateral went down, they didn't have a backup. A lot of people didn't download their loans, so a lot of people didn't have a record of what they owned. And then there was this whole data mess that went on. The administrator had to recover all of the data, and it would be a really good idea, if you do own any peer-to-peer, for you to have a record at least from time to time of what loans you own, just in case something happens to the website or the platform. Same with Bitcoin. Same with stocks and shares. Don't rely on the websites to always keep everything secure, because they do get breached sometimes. MP says, I checked LoanPad a couple of months ago. It looked like quite a few of their loans were against large commercial property. I'll look more into it. It's great they diversify. Yeah, MP, I haven't been through every single loan, but their loans are relatively small in small pieces, so I'm not sure. They usually, the average loan's about 320,000. I don't think they'd have a lot of large commercial loans. As far as I understand, HAMF just mainly develops commercial properties. Thanks for trying, MP. Appreciate that. Thanks for keeping on trying with your comment. Let's see if there's anything else going on that I can tell you about, because we have run quite a long time. I always think these streams, I want them to go for an hour maximum, and I just always seem to go over, because there's a lot of information to cover. So yeah, I'll meet with Cufflink early next week and have information for you about them. LoanPad still good. Rate setter, nothing's really changed. And assets, I think, is going to be in good form. You're just not going to see any new loans coming up anytime soon. Everything is going to be quiet, I think, in peer-to-peer. So that's about it. So I will wrap it up again. If you want to take a look at the Bitcoin investing, Coinbase is the good spot to do it. And I will post an article about it. It's a little bit outside my norms of what I post on the website, but if I see some things changing, sometimes my investment strategy does change. And I think this is one of the cases where, I think diversifying into some Bitcoin isn't a bad move for the long run. I definitely wouldn't start spreading money across a lot of different coins, because I don't think, a lot of them are going to really be anything in the future, but maybe Ethereum and Bitcoin. But I think Bitcoin is the brand that I would go with. All right. So, yes, guys, have a great night. Be healthy, be safe. Keep thanking the NHS, and we'll see you next week. It's great having you here. And please tell your friends and family about the channel and subscribe. And if you need anything, just email me at help@financialthing.com. I'll see you next Thursday at 8:15 p.m., God willing. Blessings. Thanks. Bye.